Boom. Alright, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about how the stock market sell-off of sus September keeps on keeping on. You guys, we are going to be focusing primarily on the macro today. We are, of course, going to be looking at a few of the bigger players on the charts, but we are also going to be reading over a couple of short articles touching on inflation, the CPI data that was just released earlier today. Also taking a quick look at the Apple event that occurred earlier today as well. Give you guys just my insight on how that will impact the greater equity markets and just kind of gauges investor sentiment as a whole, seeing how investors reacted to that event earlier today. In my opinion, is a little bearish. And of course, I will go on to explain why that is. And then we'll close it out in terms of articles, at least, by talking about the quadruple witching that is occurring this Friday that will very likely increase, create an environment where there is even more volatility than there already is. If you guys don't know what the quadruple witching is, you are going to find out, but it's pretty much just where a whole bunch of options contracts expire at the same time, once again creating for an especially volatile environment. Okay, so let's get into it. As always, we'll quickly go over the topics we'll be discussing, and then we'll dive into each one individually. In front of us is TradingView, where we'll cover the following names today in this order, going down the watch list you guys can see right here. Kicking it off with the good old SPY. Been a while since we covered the SPY. I know we covered the SPX, SPXL, a few iterations of the S&P 500, but the SPY is what I assume to be the most viewed by you guys. So that is the chart we're going to be using from now on when talking the S&P 500. I also like how you can see volume on the SPY as well, as opposed to the SPX. So we'll take a look at the SPY. I'll give you guys my thoughts here. Obviously, with the chart you guys are looking at in front of us, you can tell that I view more downside ahead. But I do want to talk to you guys about my price targets and, of course, tie in all of the fundamental aspects that we're going to be talking about as well that kind of reinforce my bearish sentiment on the greater equity markets at the moment. Okay, so kick it off with the SPY on the charts, move on to the VIX or the CBOE volatility index, which of course gauges general market volatility. When the SPY, it's inversely correlated to the S&P 500 specifically. So when the S&P 500 goes up, VIX goes down, and vice versa. That's why SPY red today, VIX green. Okay, so we will cover the VIX, talk to you guys a little bit about how I'm hedging my personal portfolio, considering I do expect more downside ahead. So we'll cover the VIX, and then we will, of course, move on to BTC. BTC actually showing signs of strength right now. I am keeping a very close eye on BTC at the moment. You guys know I am short-term bearish on Bitcoin, but you know what? Right now it's proving me wrong, and that's okay. As I always say, you guys, you got to adapt to the times or get slapped in the face. Okay, so we'll give you guys kind of my daily take on Bitcoin, because I know that ties into many of the plays we talk about here on the channel a lot. So give you guys my take on Bitcoin as of Tuesday, September 14th. I keep doing that. September 14th. It's sus September. Got to remember it that way. Whole lot of S's, okay? So Bitcoin, and then we'll close it out with the DXY or the US dollar index, just because the US dollar is at the base of all macro. So I want to give you guys my take there and just let you guys know how, once again, from kind of a fundamental perspective, the good old DXY ties into everything else that trades against the US dollar, which is pretty much everything, okay? So those are the names we are going to be looking at on the charts, but we will close it out today with the charts, close out the video taking a look at the charts. Always got to kick it off with the fundamentals. You guys know that. So the first article we're going to be reading over is titled Bloomberg Opinion by Brian Chapata. Inflation beat expectations by falling short. The slowdown in pace of prices increases in August is a reprieve for U.S. consumers, investors, and the Federal Reserve. So we'll take a look at this, you guys. Just go over some of the CPI data once again, or the inflation metrics that were released by the Fed today. Just give you guys a gauge of what inflation's looking like month over month and how the markets reacted to that. Again, you guys, this just right off the bat, I'm sure you guys read some of the headlines already. It was pretty basic. Like, we kind of inflation's kind of beat, kind of missed. But obviously the markets have priced a lot of this in. They're already pricing kind of slowing inflation in a little bit. And you can tell there's general fear in there. So the primary reason of all the, aside from the quadruple witching, I guess, the primary reason I want to talk to you guys about this, as well as the Apple event, which is the next one, everything Apple released, which is literally just give you guys my thoughts on this, and I want to talk to you guys about the products and what you think about them a little bit down in the comments below. So we'll talk about this a little bit, but the primary reason I want to cover these two articles is just to weigh or reinforce the fear that I can smell in the air right now, the fear that investors are exuding and displaying when it comes to price action in the stock markets, all the red we have seen in the stock markets. Sentiment is slowing, and of course, in 2021, at this moment in time, investor sentiment is so relevant, okay? More relevant than any other market environment that I've ever experienced in the past, okay? And I believe many way more veteran individuals can say the same, okay? So we'll read over this. I mean, again, just kind of talk shop with you guys a little bit about this. Such an Apple fanboy myself. Want to get your guys' take on some of the products that were released. So that'll be a fun little intermission. And then we'll close it out with, once again, the quadruple witching market watch by William Watt. Stock market traders brace for quadruple witching. Options expirations blamed by some analysts for bouts of mid-month volatility in 2021. So, again, you guys, we know options very well on this channel. You guys know how volatile options are and how easy it is to get squeezed out of options in certain regards. So because there are so many options expiring this Friday, you can't not believe that there isn't going to be extremely heightened volatility as well, especially in the wake of the existing volatility that's been displayed over the past few days, okay? So close it out with that on the in terms of articles, and then dive into the charts. But I do want to kick it off by reading over the intro to the newsletter that I wrote this morning, just to give you guys what were my thoughts this morning during trading hours, and just use this to segue into everything else that we're going to be talking about in the video. Okay, so it's a volatile Tuesday in the markets, team. Spicy tacos once again. Happy Taco Tuesday, guys. Let me know if you guys are eating tacos and tequila tonight, because I definitely am right after I record this video. Anyway, all is going accordingly as anticipated. The September sell-off in the equity markets is still in play, and I expect things to continue trending in this direction at an even faster pace. Today's inflation report showed that inflation is running hot as expected, but the fact that the markets are still bleeding tells me that every positive piece of news is already priced into the markets. I watched this video on Hedgeye's YouTube channel, which I really enjoyed, where they talked macro and inflation. Heavily recommend, fun watch as well. This link, I mean, you guys can't really copy that, but just type in Hedgeye DiMartino booth, and this should come up. It was a week ago at the time of recording, over 100K views. So it's this guy right here. I do heavily recommend that, you guys, and I would appreciate it if you guys watch the rest of this. But I do definitely, I mean, even if you guys go right now, that's perfectly fine, because this is quality content. Go watch this if you have not already, because it's easy to watch and it's very informative as well. These two are have a great dynamic together in terms of just general conversation as well. Okay, so do recommend that. Not an ad by any means. Again, I straight up enjoyed that. Listened to the whole thing yesterday. Very engaged. So good stuff there. Check out Hedgeye. Crypto is seeing a nice little bounce today, though, which is surprising. Still bearish short term. We'll cover that in part two of the newsletter, where I include charts and stuff. But we will cover Bitcoin as we dive into the charts at the end of this video as well. Okay, I'd like to have seen short squeezes performing better today. It was a bummer not to see. I mean, SPRT fell off a freaking cliff today. We'll cover that. Well, maybe in tomorrow's video we'll cover like root and SPRT and stuff. So stay tuned. And I definitely still believe they have potential in the wake of greater volatility, but retail fear is very apparent today. But we all know the diamond hands holding these plays aren't the most veteran hands as well. I think this will pass. We're just in a short-term panic. So again, you guys, considering we've seen so much volatility, and specifically SPRT, I think SPRT closed the day down close to 40%. But again, SPRT in the past month is still up, which is crazy to think. We started talking about SPRT at like $6.50, so it's still at $12. Closed the day around $12. It's still like 2x from when we started talking about it, so it's still way up. But again, it went up to $60 unforeseen, so it's not surprising to see this. I will just say right now, I picked up some SPRT today around $12. Those were my targets, as I've been talking about. So yeah, we'll see what happens there. But again, there is fear in the air, and fear obviously has the greatest impact. I was talking about this in part two of the newsletter. Has the greatest impact on risk on or hyper growth sectors of the market, which are of course plays like crypto, EVs, cannabis, just kind of a lot of the sectors that we like here on the channel. A lot of the time in times of fear, in times of liquidity crises, are the hardest hit. Okay, so just keep that in mind. Stay on your toes, you guys. Stay safe out there. All right. But anyway, we will talk root SPRT likely in tomorrow's video. So if you guys do want one of these bad boys in your email inbox every day, you want to know exactly how I'm trading all the stocks we always cover on the charts, short squeezes, crypto plays, what I'm doing in my personal portfolio, literally every single position in my entire personal portfolio, which I do update every single trading day during market hours, along with, again, one of these bad boys is the intro, and then I send out the part 2 about half an hour after this with charts and price targets and whatnot, talking about my trades, rationalizing my trades to complement every single daily update once again during market hours. So you guys are interested in that, first link down below, $15 a month or $40 for every 3 months. Do my best to make that worth your hard-earned money. Put most of my time into this every day. Of course, you do also get the exclusive Sunday Stock Watch link as well. Just a cherry on top. And again, I do my best to make this worth it for you guys. Appreciate it if you guys check it out. But if not, no worries at all. Appreciate you watching. Right now, let's dive into this article. Kick it off with some inflationary data. So this is the longest article we'll read. Will probably take us a minute or two. So we'll be quick. And then again, we're just tying this in I just wanted to talk to you guys about this to definitely inform you guys, because this is very important news to have. Again, you guys, the reason I actually enjoy a lot making these macro videos, because as a trader over the years, obviously, if you want to capitalize gains, it's fun to hop on short squeeze sectors and stuff. But if you want longevity as a trader, if you want to kind of feel good and feel competent as a trader, as a real trader, then you want to understand macro, because macro is the basis of everything. And what happens in the macro environment, just on the global scale, will always impact the smaller markets like risk-on sectors like we kind of just mentioned. Okay, so anyway, use that to tie in to this article. Bond traders like to be as efficient as possible when quickly analyzing incoming economic data. Often the reaction boils down to 4-letter words: beat or miss. For something like the August jobs report released earlier this month, it's intuitive enough. U.S. employers added 235,000 workers, much lower than the estimated 733,000. That is much lower. That is a miss. That's a very clear miss. Everyone can agree that more hiring is better than less. A higher number is almost always preferred for consumer survey data gauges of manufacturing activity and retail sales. With inflation, however, it's trickier. The U.S. Core Consumer Price Index, or CPI, rose just 0.01% in August from the month prior, the smallest increase since February, according to the Labor Department data released Tuesday. Economists had forecast a 0.03% advance. Sure enough, some interest rate strategists immediately pointed to a miss as long-term Treasury yields tumbled. I'd call it a beat. At this point in the recovery, the Federal Reserve and investors broadly aren't concerned about the world's largest economy veering into a deflationary spiral. Year-over-year CPI, core CPI is still at 4%, while the headline figure that includes energy and food prices is at about 5.3%, among one of the highest readings in the past 3 decades. So close it out with this, and then we will move on to the next article. It's too soon to say whether August CPI report is a step towards vindicating Fed Chair Jerome Powell, who has largely maintained that the sharp rise in inflation coming out of the pandemic slowdown will prove transitory. As FHN's financials Chris Lowe noted, core goods prices rose 0.3% in August, while core services were flat, suggesting that the Delta variant curbed consumer spending on the latter. Powell and his colleagues will discuss their views at next week's Federal Open Market Committee meeting. So again, you guys, inflation, although still historically very, very bad, like the best of the worst in 3 decades, as this guy stated, is still slowing down just a bit. It was cool, and as he said, this is a beat, although certain strategists and analysts called it a miss. But in terms of what the markets are expecting, because again, you guys, just look at this look at this chart. Look at this chart. There's so much priced into this market already, and yes, money's been printed. That is the primary reason, obviously, for hyperinflation. But when you look at this chart, that is the look. Considering economic output and GDP is significantly less than it once was. Obviously, tech is propelling everything, but for the most part, U.S. GDP and economic output and economic productivity is way down compared to it's down enough to not justify inflation, creating this much inflation within assets or asset inflation. Okay, I was kind of sorry. I should have figured out how to rationalize those thoughts a little more, or articulate those thoughts, I guess. But I hope you guys get what I'm saying there. Anyway, I do still think that a lot of the bull cases that could possibly be made about the markets right now are already priced in, which makes me think, especially with everything starting to slow down, visibly becoming slower, fear is in the air. You can see that trend lines are broken. There's just so many dark stars aligning that lead me to believe, from both the technical and fundamental perspective, that the markets will see more downside. And again, I'll rationalize some price targets on the charts, talk to you guys about some downside price targets there. But the fact that inflation was still up, again, it was down. It was the least It was the least amount of percentage increase since the month of February, which is slowing down a little bit. Inflation is not running as hot, still running hot, not as hot. But again, the markets have already priced a lot of the inflation in, and from here, I think it's going to continue to cool down and beat on inflation, creating an environment where the Fed will likely taper their bond purchases. They will rise interest rates and just stop pumping so much money into the economy, which of course is good for the dollar, which we will cover at the end, and bad for the equity markets. Okay, so let's quickly take a little hiatus. So I don't think that's the right word to use. Little intermission. There we go. And talk about the new Apple, the Apple event that just occurred. Straight up, Apple kicked off its fall product event on Tuesday by driving right into lots of product announcements. Here's what Apple announced: new iPad mini, Apple Watch Series 7, iPhone 13, 13 mini, and the iPhone 13 and 13 Max. You guys, I'm an Apple nerd. I record this on just a straight up laptop. If you guys didn't know, just a straight up M1 brand new MacBook Pro laptop. Got the iPhone, the newest Pro Max, and I will straight up be ordering the 13 Pro Max when it's available to me. Okay, so let me know down below if you guys are excited about this event. If you guys, I'm straight up not. I'm not gonna say I'm excited. I was hoping for new AirPods, honestly. So I'm not excited as just an Apple fanboy, and an individual is fortunate to be able to afford just getting the new phone when I want to. I will definitely get the new Pro Max. I actually have a cracked phone anyway, so I can't justify that a little bit. But let me know if you guys are Apple people, if you're Android people, why that is. And pretty much that's all I wanted to talk about. To tie this into the markets, Apple was down today. Apple stock was down today. So obviously consumers weren't impressed. Apple, I haven't seen Apple in so long, but Apple obviously like over $2 trillion company at this point. So Apple, massive company. I mean, there's so much priced into Apple, Tesla, the bigger players in the S&P 500, because the S&P is market cap weighted. Plays like Apple, players like Tesla have a very, very heavy impact. So the price action of those two stocks, those two names specifically, and many more, of course, the FANGs, do have a heavy impact on the greater equity markets because they are market cap weighted. The equity indices are market cap weighted. Okay, so this is another bearish thing for the markets. I mean, consumer spending, money is just starting to run out. Like, people are just starting to take it easy. And honestly, although I'm buying this, once again, I'm in a privileged position, and I know many other people are as well. I don't want to call anyone unprivileged because everyone's privileged in their own ways. But I'm just going to say that I feel like, and this is strictly speculation, but I'm feeling these sales being pretty trash this year. So I'll just say that right now. So again, that is bad for Apple, which is in turn bad for the S&P 500 and the greater equity markets. Let's close it out with this article, and then we'll just jump straight into the charts, close out the video. Stock market traders brace for quadruple witching. The stock market is repeating a pattern of mid-month stumbles, some analysts tie to options expirations. That dynamic could be amplified this week ahead of the quadruple witching. The simultaneous expiration Friday of individual stock options, stock index options, stock index futures, and single stock futures. Options are financial instruments that give the holder the right but not the obligation to buy. In the case of a call option or sell, in the case of a put option, the underlying asset is set by a certain time. If you guys didn't know what options are. Almost like clockwork, quote, over the past 6 months, the S&P 500 has fallen in the week leading into the OPX. So the risk is we see this flow repeat and come into play this week, which could mean weakness in Friday's expiry. Although perhaps it's all too obvious now, just because, again, like, we're seeing the same thing happen over and over again. But that's kind of how I felt about the September sell-off. Like, how September is historically a bad month, sussy September. But we're seeing it happen. So the market, again, that's why retail investor sentiment is so powerful in 2021, because retail investors, and it does bleed over into institutional investors as well. Investor sentiment in general, the way investors are feeling about the markets emotionally, bullish or bearish, has very, very heavy impact on price action. And that's why we're seeing September be red, because I think a lot of traders are willing it into existence, because everyone knows that September is historically a bad month for the US. So if there's something I've learned, it's that if you think something is too obvious, it's probably not, because that's just how the market is. It's too obvious because nothing really makes sense in the weirdest way. That was kind of contradictory, but I think you guys know what I'm talking about if you guys have been watching the markets. Said Chris Weston, head of research, Pepperstone. Moving on to close it out, heading into Friday's quadruple witching, a convergence that occurs once every quarter and is typically associated with the potential for increased volatility and high trading volume. Stocks were stumbling again. The S&P500 had fallen 6 of the last 7 sessions, while the Dow has declined in 9 of the past 11 sessions. Quadruple witching can make for a choppy trading because so many things are coming off at once in firms unwinding positions versus each other and versus their stocks. That activity, combined with a lack of fresh trading catalysts, and could continue to make for choppy price action in coming sessions. Okay, so that was in the words of JJ Kinahan. That is that, you guys. I'll let you do with that what you will. I've pretty much given you guys my entire take on why this, like, it's evidently, after just reading through that, it is evident why this quadruple witching will create for an especially volatile environment. So again, you guys, just a note right now before we dive into the charts, stay on your toes, be safe as we close out the week. Maybe things get lightened up next week. Hey, maybe they lighten up this week. I don't know. This is all just my opinion. And that's what I'll say. That's the last note before diving into the charts. So you guys, obviously, based on these arrows of doom, you can tell that I'm a berry bear. I'm a hungry bear. I'm loaded up on on puts, certain puts, or on put options on certain S&P 500 ETFs, and calls and shares on certain VIXY ETFs, VIX ETFs. So keep that in mind, you guys. I'm biased towards the downside. I am a bear, but also remember, this is straight up just my opinion. I could be completely wrong. Okay, so S&P, straight up right off the bat from a technical perspective, why I'm bearish. The SPY has broken 2 significant lines of support. This cyan line of support right here, although you see a bunch of dips below it, is a very, very strong line of long-term support. You can see that evident in a few touch points here on these daily candles. We are sticking strictly to the daily candles, but the SPY has officially closed below its short-term line of support. Touch point here, mid-July. Touch point here, mid-August, a month later. Touch point here, just under a month later, where we have officially broken. So again, these are little dips that are caused mid-month, kind of like the last quadruple witching article was saying, where there are those mid-month option expiries that create for a volatile environment, which is kind of what we're seeing now. And again, I do think it's a lot more likely than not that persists throughout the rest of this trading week. So I do think from here, the first level I'm going to be looking at for the SPY specifically is going to be around 420 to keep it even, because I said that in the SPX video, but 420 is the first downside price target that I will be looking at. Psychological even for many of those laser eye retail traders out there. You guys know why that is. But realistically, where I have this line drawn is at about $418 on the SPY. Just using the initial high of this parabolic rally prior to seeing the correction, probably the most significant elongated correction that we've seen since this rally that's lasted for the past few months now. So I do think that, again, you guys, reversion to the mean, always say that with Bitcoin, revisit of the initial high of the existing rally. I do think that the first area that will act as somewhat of a floor where we will start to see a bounce is around the 420 mark for the SPY, which from here is a 6% correction. But I do think that in total, we could definitely see up to, where is this at, roughly a 14 to 15% correction from current levels to test the previous line of support, now new resistance. Very, very significant trend line on the long-term, dating all the way back to 2019. It's not loading, or 2018, I'm sorry, where the SPY has been in a massive megaphone channel. So wouldn't be surprised at all to see us come down here. Honestly, we could come down to retest the previous high before the big sell-off in February of 2020, around 340. But for now, I'm personally looking at about a 14 to 15% correction. I think that's a lot more reasonable. That's something I feel confident in saying to you guys. At some point in time, again, you guys, maybe it happens now. My gut feeling, my gut instinct tells me that now is the time, that now is the month. So September, then Halloween is spooky too, or October is spooky too because of Halloween. So again, you guys, again, this is just my opinion, but I do think that we will, from current levels, see a 14 to 15% correction in total in the S&P 500 over the course of the coming, I'll just say, month. Okay, so that's a SPY. Move on to the VIX, of course, a way to hedge your portfolio in the case of greater equity downside. Honestly, you guys, I usually look at VIXY, which is what I personally trade. I'll just tell you guys that. Barely look at the VIX, but I guess this one didn't sync because I just re-edited it. That's okay, though. There's not much to talk about here. And also, like, it's not really relevant to look at the VIX on the charts just because it's inversely correlated to the S&P. So trend lines don't mean all that much in the VIX. But I do want to show you guys here what can happen when things get super frothy. So if you go back here, when things got absolutely crazy, when things got crazy in, again, February or March of 2020, when the Black Swan event happened, that was COVID, when there was the liquidity crisis, everyone chased dollars and equities all over the place sold off. The VIX was up 366%, okay? So it went from where we're at right now, around 20, to a high of 85, which is over a 4x, okay? So, again, when things get choppy, and you guys can see it happens all the time, and that's why I just think it's about time for another big move up, just because we haven't seen one in so long. And that's just the nature of the markets. You can see this, like here, October 30th, here, January 30th. So like 4 months later, same thing here, May 15th, like again, another few months there. So every few months we do see a big move up. I think it's only a matter of time. Things just feel frothy for all the reasons that we just talked about. And I think the VIX has a lot of potential. And of course, once again, VIXY is the primary ETF I play. I'll just tell you guys that. If you guys do want to know exactly the exact calls and the exact share structure in my portfolio, once again, first link down below. Anyway, that's the VIX. Just keep an eye on that, you guys. Just give you guys a little. If you guys don't know, I assume most of you know. If not, it's okay. Just want to let you guys know that there are ways that you can just buy shares of something to directly hedge downside in the equity markets, particularly the S&P500. I'll talk Bitcoin real quick and the DXY. Again, Bitcoin showing a little bit of strength right now, but still not looking good. So the silver lining right now for Bitcoin is we broke above 47K. We did break above a pretty significant trend line right here, this orange line of resistance right here. But we are still in a technical downtrend. We have set a lower high on the short-term uptrend. We are still below this previous ascending channel that was so beautiful. So if I'm being honest, you guys, best case scenario, say capital does flow from equities. We do see the S&P 500 continue to sell off, Nasdaq sell off. Some of the money that's sold off in Robinhood wants to go invest in Bitcoin. That causes the price of Bitcoin to go up. Maybe we see us retest this previous line of support as a new resistance, which by September 20th, like a week from today, would take us back up to exactly match the previous high we set on September 7th. So maybe we come up here, set a double top, but in all honesty, you guys, just because I'm bearish on the equity markets, I have to stay bearish on Bitcoin. And again, you guys, when we see a big move down like this, it's so rare we don't see it followed by another big move down. So I'm just using historical data of looking at Bitcoin for the past few years to establish that conclusion on top of just everything we've been talking about once again. So I do think Bitcoin is still going to see some downside, even though it looks pretty good right now. Again, there's always the possibility that we do see upside. It's it's not very likely in my opinion, but it's always possible that we do see upside. But again, my money's still on downside. I do still think the 30,000s are in the cards by the end of the month of September, okay? So that's Bitcoin. Quickly closes out with a DXY because DXY is the base of all macro. DXY is floating almost directly on this ascending channel. Pretty strong line of just pretty strong trend line that is in play right here. So the DXY is looking weird, but honestly kind of good. Like when you look at this chart looks more bullish than bearish to me. Okay, we are finding some stability, but in terms of the short term, I do think that DXY can definitely break back into this ascending channel. It's already done it a couple of times, and we're about to do that now. And again, you guys, just because I'm bearish on most assets, most assets that have seen so much freaking upside, I do think it's time for the dollar to shine. I do think the dollar will reclaim value as, again, the eviction moratorium runs out. I believe that's in early October, so less than a month. That's running out. A lot of people are have stopped receiving unemployment, so that's over. People still aren't getting jobs. So I just think from a straight up common sense perspective, dollars are going to be worth more because there's it seems like people are kind of running out of money. So that just leads me to believe people are running out of money. That creates a higher demand for the dollars. And if the Fed sees inflation still kind of running hot, and they do start to taper off, which is likely to happen this fall, in the words of many analysts, competent analysts that I do take their word with some meaning, I do think that there's a lot of catalysts leading to more upside in the dollar and more downside in assets. You guys, we're going to call it there. I'm going to stop ranting because we just talked about all of this. But again, you guys, I really enjoy making these macro analysis videos, talking about the macro, because macro is the base of all trading. So you guys you don't need to do shit, but just understand it to some extent. Just have an idea of what's going on, because it's good for you as a trader, and it makes you feel better about yourself, and not just like a gambler, and actually like a trader. Like, treat this like your occupation, guys. Do some learning, put the time in, and it will pay off. So we'll call it there, you guys. Let me know what you thought about the Apple event down below. Let me know what you think about the markets, if you agree or disagree with my opinion, with my bearish sentiment. Again, I'm a hungry bear, and let's hope we eat some fire sushi sashimi. So let me know what you guys think down below, and I'll talk to you guys downstairs. Until next time, always remember, take action, make waves. Peace, guys.